Along with opening day and rain showers, April also brings earnings season. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins us to talk about why first quarter earnings are so important and what to expect. He's with Business Watch producer Kelly Leon in the studio. Mike and Kelly.
Thanks, Peg. Hi, Mike.
Good morning.
Okay, we have to back up. Earnings season.
Sure.
I'm not sure what that is.
Sure. Well, it's pretty simple, really. So that refers to the several-week period that follows the end of each calendar quarter when companies report to the public their quarterly results. And so this is a very important time for investors as they look to see how different companies are performing. And of course, we get a lot of market movement during this time too. A good report can send a stock higher. A bad report, or even a mediocre one really, can send a stock lower. So, and it goes really beyond individual companies too. When we look at the reports in aggregate, it gives us a pretty good idea of how different industries are performing, and extrapolating further, even how the economy as a whole is doing. So a lot of attention being paid right now to these reports as they're coming out. But a couple wild cards this time around, and those are foreign exchange rates and the bad winter we had. So we'll have to keep those in mind as we sift through what these results are.
All right, well, let's start with foreign exchange rates. What kind of impact will they have?
Sure. So, in a global economy, exchange rates are a pretty big deal. And what we saw starting late last year and in the beginning of this year was that there were pretty significant and sudden movements in the strength of the dollar. And so this presents some unique challenges. Many large U.S. companies, despite being based here in the U.S., do the majority of their business overseas. So fluctuations in that exchange rate can really have an impact on their earnings. In fact, we got a taste of this earlier this year when P&G came out and said they were already seeing a negative impact to their earnings because of the stronger dollar. So I think we're going to hear that a lot more frequently now that companies are reporting their first quarter earnings. The silver lining is that companies can adjust to that, and usually pretty quickly. So going forward, it might not be such a hurdle, but for this quarter, I think we're going to hear a lot of it really holding back what companies were able to do.
Okay, and then the second factor you mentioned was weather.
Weather, yeah.
What a wonderful winter we had.
Exactly, no doubt. So this is actually kind of a replay of what we saw this time last year. So we've had a couple bad winters in a row now, and when the weather's bad, people don't shop. They don't buy new houses. They don't buy new cars. Transportation slows down. Factory production slows. So, if the consumer's not spending, the economy suffers. And what we saw last year and expect to see again this year is companies saying, hey, especially if we're consumer-oriented, the consumer wasn't spending. That puts a real dent in our quarterly results. So there's a silver lining here too, and that is that last year we saw that the business activity that declined in the first quarter because of weather, it wasn't lost, it was just deferred or postponed. So that once the snow melted and spring came, that business activity picked up again very sharply. So we're likely to see that impact earnings for the first quarter, but hopefully we get a nice rebound for the second.
So the weather's getting nicer, get out there and spend.
Exactly.
Is that your...
Buy that new house, buy that new car. Right.
There you go. All right, Mike, thank you. We appreciate you. We appreciate U.S. Bank.